So in the last two lectures, we discussed two main sections of applying tax on long-term capital gains. These two main sections are section 112 and section 112A. LTCG can be taxed as per these two sections. Either it is 112A or 112. For other category of people like non-residents, we are having other sections also, 115D, etc. But those are not in our course. For our level, at our level, we have only two sections to apply tax on long-term capital gains, section 112A and section 112. These two sections only gives the tax rate. Calculation we do as per section 48 of the Income Tax Act. How to compute LTCG? It is none of the business of section 112 and 112A. Once you compute LTCG, then what tax rate you have to apply, that depends on section 112 provisions or 112A provisions. Is it clear? If yes, please raise your hands. Do you remember these points? If yes, please raise your hands. Okay, now I am starting today with another special section of computing tax on short-term capital gain. Section 111A, section 111A. This is the section which is a special section and it gives you special tax rate on selected short-term capital gains. So let me start discussing with you section 111A. After this, almost the topic capital gain will be over. I will discuss with you one full-fledged question and then we will end the discussion on capital gain. So today we will wind up capital gain. So for the time being, let me start with you. Let me start discussing with you provisions of section 111A. Discussion on provisions of section 111A. So let me share my screen and let us start learning the concept given under section 111A. This section talks about tax on short-term capital gain. Not every short-term capital gain. Selected STCGs. So what do I mean by selected? Selected I will get to know when I will read the provisions of section 111A. Only then I would be able to know what do I mean by selected. So let us start discussing the provisions of section 111A first. So I will compare it just like 112A. That first of all, conditions. Of course, these two sections are different, but the structure would be almost similar to 112A. Structure, conditions. Let me show you the conditions of 112A and then I will help you in understanding the conditions of 111A. So first I will discuss with you conditions. So main thing is applicability. In 112A, the condition was there should be a long-term asset. Now it should be a short-term asset. That asset could be an equity share, units of equity oriented fund, or units of a business trust. Here also these can be equity shares, units of an equity oriented fund, units of business trust, but short term. Transaction of sale must be done on or after 1st April 18. In now this STCG of 111A, I will write this date as 1st October 2004, and STT in 112A requirement was at the time of sale as well as at the time of purchase. In this case now the STT payment compulsion is only at the time of sale, that's it. So let me write the conditions of section 111A for you. Okay, conditions. First point, asset should be a short-term capital asset. So main thing is applicability. So it's only to make sure that when you compare the provisions of section 112, 112A and 11A, you can easily spot the difference. So applicability was my first heading in earlier sections. That is why I am writing this applicability as heading in section 111A. Otherwise, you can write anything. You can directly write that conditions for section 111A or applicability of 111A, anything you can write. I am writing this applicability only to show you that section 112, 112A and 111A, how and up to what extent these are related or different. That's it. Condition, short-term capital asset. This asset can be what? Equity shares, units of an equity oriented fund. Equity oriented fund means those mutual funds which are equity oriented. And third is units of a business trust. We never use this units of a business trust for our level. For our level, this business trust never comes in the examination. That is not in our course. We only refer mainly these two, equity shares or units. And within units, we will find mutual funds. Equity oriented mutual fund, basically. The meaning of units of an equity oriented fund for your level will be nothing but equity oriented mutual fund. That's it. Transaction. This transaction has been done on or after 1st October 2004. Can you tell me logically why it is 1st October 2004? Can you tell me logically why it is 1st October 2004? Because short-term this securities transaction tax came into India on 1st October 2004. Because of the applicability of the provisions of security transaction tax, these new sections were inserted basically. And last time is STT must have been paid at the time of sale, not at the time of purchase, at the time of sale. If these all conditions are satisfied, then if all the above conditions are satisfied, my gain would be short-term capital gain and it will be taxable at a flat rate of 15%. That's it. Short-term capital asset, equity share or units of an equity oriented mutual fund. Transaction of this sale has been entered into the market on or after 1st October 2004, and STT must have been paid at the time of sale. So one thing is sure that these shares are listed. This is sure because you pay STT at the time of sale. And not only the thing that share must be listed, these must be entered into or sold into, sold where, at which place? Recognized stock exchange in India. because when these two things happen, only then you pay STT. First, these must be listed, and within this concept that these must be listed, transaction must be in the market, not off the market. So if you are selling the shares at a recognized stock exchange in India, then you have to pay STT, whether you are a buyer or seller. Both have to pay STT. So if all these conditions are satisfied, my STC will be taxable at flat 15%. Flat 15%. This is first heading. Next. So next heading now. Concept of relief. There was a concept of relief under section 112. There was a concept of relief under section 112A. The same concept of relief applies in section 111A. And what is that concept of relief? If you remember that if my total income excluding such gains is less than my exemption limit, then whatever is the difference, that difference is nothing but relief, and this amount I can shift from short-term capital gain of 111A towards my total income. That's it. So the relief amount, I'm not telling you again. This already I have discussed in section 112 and 112A. Same concept is there. The only thing is in those sections, section 112 was written or 112A was written. Now I will simply write section 111A. That's it. Otherwise, the relief point is similar as compared to earlier two sections. So I'm proceeding now. Here also, from this gain also, you cannot give any deduction under section 80. Not available. From this gain, no deduction of section 80 is allowed to the SSA. Not available. That's it. This is what my section 111A. I will discuss with you a small numerical and you'll find it very easy. Till this point, if everything is clear, please raise your hands. Now, in section 112A, as I told you, that 112A section provisions got changed little bit on 1st Feb 2018, when in the Finance Act or when the Finance Minister presented the budget on 1st Feb 2018, some changes were made in section 112A. Before 1st Feb 2018, there was not much difference in section 112A and 111A. Let me tell you what happened. Before 1st Feb 18, 100% of long-term capital gain on sale of listed equity shares was tax-free under section 10 clause 38 that I have told you. When I was discussing section 112A, that I told you. What I want to tell you now is before 1st Feb 2018, the only difference between section 112A and 111A was what? Can you judge what was the only difference? This was covering long-term assets and this was covering short-term assets. This was basically 100% tax-free, but section was 1038. And this is same. Earlier also it was taxable at a flat rate of 15%. Or practically I can say that before 1st Feb 18, whatever were the points basically of section 1038, those were almost similar with the points of section 111A. Again, listen what I am saying. Before 1st Feb 18, section 112A was not applicable. It was made applicable from 1st Feb 18, and when it was made applicable from 1st Feb 18, 90% of conditions of section 10 clause 38 were taken as it is, and some additional changes were done, some additional points were written, and it was made equal to 112A. So what I want to tell you is, before 1st Feb 18, section 10 clause 38 and section 111A were almost similar. The only difference was, in section 10 clause 38, assets were long term, and in section 111A, assets were short term. Now also, if you see section 112A and section 111A, what is the difference? You can carefully see. But before that, you must know the history of 112A. What is my 112A section? 1038 section 10 clause 38 plus some additional points is equal to section 112A. 112A was not applicable before 1st Feb 18. It was made applicable from 1st Feb 18. So what is the composition of 112A? From where you got an idea? I got an idea, or department got an idea, or the provisions were that take section 10 clause 38 conditions as it is plus some modifications and let us make it as 112A. So what I want to tell you is the difference between 112A and 111A. The main difference is, what is short term here in 112A? This short term is nothing but long term. This is the difference. In 111A, I am saying that transaction of sale must be entered on or after 1st October 4. In 112A, I am writing this date as 1st April 2018. This is another change. And in 111A, I am saying that STT must be paid at the time of sale only. In 112A, I am saying that it must be paid at the time of purchase also. Let me again, in the next on the next screen, let me again tell you what is the main point which I want to tell you. Though it is not necessary for you, but still I think I should tell you a little bit of history so that there is no confusion in your mind. On 1st Feb, when Finance Minister presented the budget, some changes were done. In the budget of India, on 1st Feb, Finance Minister said that, so if this is the date 1st Feb 18, before this date, what was happening in India? There were two sections, 10 clause 38 and 111A. What were the conditions of these? Long-term asset, short-term asset. These assets must be equity share or mutual fund equity oriented. Same here, equity share or mutual fund equity oriented. Transaction of sale entered on or after 1st October 2004. Same here, on or after 1st October 2004. STT was compulsory. STT was compulsory only at the time of sale. Same here. Same here, that STT was compulsory at the time of sale. So till 31st Jan 18, before the budget was presented, or precisely you can say in this budget, a new section was introduced, section 112A, which was to be implemented from 1st April 18, which was to be implemented from 1st April 18. So I'm not discussing this budget. Suppose I'm at 31st December 18. If you see yourself present on 31st Jan 18, if you go into the back era and suppose you are on 31st Jan 18, then you had these provisions with you. And see, notice the difference. What is the difference? Only if the asset is long term, you apply 1038. If the asset is short term, you apply 11A. Otherwise, everything is same. In this section, 100% of LTCG was tax free, exempt. In this, not 100%, flat tax is 15% on STCG. Is the position applicable in India related to equity shares sold in a recognized stock exchange clear till 31st Jan 18? If yes, please raise your hands. Now, is the position in India applicable on sale of listed equity shares till 31st Jan 18 clear in your mind now? If yes, please raise your hand. Okay, what happened after this? When the next day, now you see yourself as the person who is on 1st Feb. Suppose at 12 p.m. or not 12, suppose when the minister presented the budget at 1 p.m. in the afternoon, now one thing will change in your mind. So what had happened next day? Now there was a news or not news, one thing was official that in future this 1038 is going to be abolished. Of course, that will be implemented from 1st April 18, but everyone got to know it about on 1st Feb 18. On 1st Feb 18, everyone in India got to know that there will be no section 10 clause 38. And from 1st April 18, that will become history. So new section will come on this date. New section will be 112A. So what is the composition of 112A? 90% of 1038 plus some modifications makes up 112A. Is equal to 112A. So what is the new conditions now? First, long term. So it was same. Now you compare it with 1038. Still it is long term. Then equity shares oblique mutual fund equity oriented. One new addition has been done that now some ULIPs are also covered. This is only from this year, so that I'm not writing. I'm keeping it simple. The date which was on or after 1st October 4, now it has become on or after 1st April 18. This is the change. Earlier, when it was compulsory to pay STT at the time of sale, in this section, it was made compulsory to pay STT at the time of purchase also. Otherwise, almost everything is same. But now, till 1 lakh is tax free. And over and above, exceeding 1 lakh, it is taxed at flat 10%. But 111A remains exactly same even today. Short term, same equity share oblique mutual fund equity. Same which was there earlier, it is there as it is now. On or after 1st April 18. Same STT at the time of sale. Same 15% STC. That's it. So now I think the picture is clear in your mind that you can easily make a comparison between 111A and 112A now. And the comparison becomes easy if you know or if you can relate 112A with earlier section 10 clause 38. That is only for your knowledge purpose. That's it. Is it clear? If yes, please raise your hands. If you have any doubt, you can ask me. Otherwise, please raise your hands if the picture has become a little bit clear. That yes, what is the history of this 112A, 111A, and section 10 clause 38. Do remember one thing, that 10 clause 38 is not applicable in India now. 112A has taken its place with some modified form. That's it. Please raise your hands if the point is clear. Those who have not raised their hands, is this point not clear to them, or they don't have time to raise their hands, or do they think that they are very intelligent and don't know everything?
Excuse me, sir.
Yes, yes.
Sir, when SPT introduced, what was the rate?
1st October 2004.
Okay, sir.
Now let us start discussing a numerical on section 111A. So let us discuss a numerical on section 111A. So let me discuss one example from my book, and we will discuss one numerical of 111A. Example. P 45 years. There is a person P whose age is 45 years, who is a resident and of course individual, has taxable short-term capital gain of 3 lakh under section 111A during the previous year 2021. So I have been given directly the answer of 111A, short-term capital gain 3 lakh rupees. He also has a short-term capital gain of 1 lakh 30 from transfer of a building. Transfer of a building is also, question says, short-term gain. So this building must have been transferred within 2 years, but it is not 111A. 111A is having some conditions, so that you have to check yourself. There is income from other source given 1 lakh 50. Total is gross total income. How much? Gross total income is 580 less deduction under section 80. He has deposited 50,000 in his own PPF account. Total income 5,30,000. That's it. So question says you simply compute the tax. So my job is to simply compute the tax. So let us start computing the tax. So how much is the tax? First of all, before taxing any total income, I must see, is there any special income included? Yes, special income is 111A, which is taxed at flat rate of 15%. But I know that there is a concept of relief. And what is that relief? Since the person is a resident individual, how much is his total income excluding gain of 111A? How much is his total income excluding this gain? 530 minus 3 lakh. It is 2 lakh 30. Is this less than the exemption limit? Yes. What is the exemption limit of this person whose age is 45 years? This is the exemption limit. Is it less? Yes. By how much it is less? The difference is 20. This is the amount of relief. So if I shift from this 3 lakh STCG, if I deduct 20,000 from here, and if I add this 20,000 on this total income, still the total income would be tax free. So government says this shifting is permissible. So my tax on STCG under section 11A at the rate of 15% will not be imposed on 3 lakh. It will be imposed on 2,80,000 at the rate of 15%. It is not a new point. Those who have attended earlier 2 lectures, they can easily relate it with that relief. It is same, exactly same. There is no difference. This is my STCG. And of course, when you get this relief, of course, it means your remaining income tax is nil, because your remaining income will be till the exemption limit. That is why you are in a position to give relief. Less rebate under section 87A. I can give rebate under section 87A, but since the total income is more than 5 lakh rupees, the rebate 87A is nil. Add cess at the rate of 4%. 1680. That's it. Please raise your hands if this question is clear. So now this short-term capital gain is also over. Chapter capital gain is over now, except one topic, and that topic I can discuss with you only when I have discussed with you profits and gains of business and profession. So one topic is left from my side, which I'll discuss when I will complete PGBP. This topic which is pending is how to compute capital gain. How to compute capital gain when depreciable assets are sold. How to compute capital gain when depreciable assets are sold. Can you tell me under what sections you compute capital gain right now? What is your knowledge about capital gain? If you have completed the topic capital gain, under which section you compute capital gain? I just want to ask this question. Under which section we have learned computing capital gain?
48.
Yes, this is the only section in which or under which I compute capital gain. That is section 48. That is another case that it can be my long term or short term. There are some depreciable assets. What do I mean by depreciable assets? Can you tell me logically what do I mean by depreciable assets? On which? What do you charge?
So depreciation.
Yes, on which depreciation is charged. These are depreciable assets. And who can charge depreciation? Only a businessman. Only a businessman can charge depreciation who is using the assets for business purpose. So that is why I'm saying that you must be having PGBP income, or even if not an income, but there must be some relationship with your profits and gains of business or profession. When as a businessman or as a company from whatever, if there are some assets on which you are charging depreciation, and if you sell these assets, then you never compute capital gain under section 48. For this we have special section to compute capital gain, section 50. This topic is pending from my side because I cannot teach you this topic until unless I discuss with you section 32 of PGBP. The moment I discuss with you, I will discuss with you section 32 of PGBP. On the same day, I will discuss this section 50 also with you. So section 50 is the only exceptional section which tells you how to compute capital gain, and only when depreciable assets are sold. If you are not selling depreciable assets, you have only section 48 with you. That's it. Please raise your hand if the concept is clear. This section is pending, and with this chapter capital gain is 100% over from my side, and this is what we have covered for the purpose of becoming a semester 3. These are the only concepts which will be used for our semester 3 level. So I'll discuss with you only one full-fledged question, and after this I'll take a short break and I will start PGBP. Or that depends on you whether after discussing this, whether after having a discussion on this question which I'll discuss now, will you be interested in starting PGBP today, or you want me to wait for tomorrow? But let me first wind up or discuss with you one full-fledged question of capital gain. So let me share the screen with you.
Excuse me, sir.
Yes, yes.
Sir, I have a doubt that it is possible that कि जो हमारी basic assumption limit होती है, so हम वो उस पहले special income से deduct कर सकते हैं.
मैं समझा नहीं, मतलब कैसे कहना चाह रहे हैं आप?
Like sir, एक बारी previous slide पे जाना sir.
हाँ, एक मिनट. This slide, please give me 1 second. Yeah, now you please ask.
Yes sir, just like जो person था उस 45 year old, so उसको सर exemption limit allowed होगी ना सर 2,50,000 तक. So सर वो exemption जो limit होगी वो सर हम STCG जो 11,111A वाला है उससे deduct कर सकते हैं वो वाली, like हमने जो normal income से.
बिल्कुल नहीं कर सकते. गवर्नमेंट आपको बेनिफिट दे रही है only if excluding this special income, और स्पेशल इनकम में भी हर इनकम नहीं आती है. Lottery is also special, but we never give this relief in case of lottery. That special is only 111A or 112A, or also normal long-term capital gain also. That's it. But only you can deduct that much of that special gain, whether it is taxed as per section 112 or 112A or 111A, only if your total income excluding this income is less than the exemption limit. That's it. You cannot say that first of all I will deduct my entire this special 112, 112A or 111A from the exemption limit. It's not allowed.
Okay sir, thank you sir.
Now please take the screenshot of this question. Let me show you this question. This is fifth problem, problem number 5. Please take this screenshot of problem number 5 and then raise your hands if you have taken the screenshot of this problem. So I will start discussing this case with you. If you have this question, whether as a book or if you have taken the screenshot, please raise your hand so that I get to know that you now have this question with you.
Sir, what is the page?
Page number 7.663, 7.63, page number 7.63. Hurry up, raise your hands if you have taken the screenshot. Okay, so I think I should start discussing this case. Now let us read it carefully. D purchased jewelry worth rupees 80,000 during the year 6-7. During the year 12-13, he further purchased jewelry worth rupees 90. Now both these are different. First might be also a jewelry, second is also a jewelry, but it doesn't mean that I will merge these. These assets are separate. I always sell single asset, that's it, it is fixed. I have purchased one house, tomorrow I have purchased another house, and if I sell both the houses, it doesn't mean that I will combine both the purchase prices also. Gain or loss will be computed separately. So technically two assets are there. First of all, this thing you must remember. Entire jewelry was sold by him. Though I am selling the entire jewelry, but gain or loss will be computed separately because both were different. Entire jewelry was purchased by him on 15th May 20, which is my previous year. The date is my previous year. The jewelry purchased in 6-7 was sold for 8 lakh, and that purchased in 12-13 was sold for 10 lakh 10,000. Expenses on transfer of jewelry were 1% of sale price. It is nothing but expense on sale. He purchased a plot of land for rupees 4,15,000 on 4th Jan 2021 for construction of residential house. For what purpose I have purchased the land? For constructing a house. On 15th June 21, he deposited 6 lakh in the capital gains deposit account scheme, and a further sum of 2 lakh he deposited on 15th November 2021 for the purpose of further construction. He owns only one residential house as on 15th May 20. Compute the capital gains for the assessment year 21-22. CII cost inflation index for 2006-7 is 122. For 2012-13 is 200, and for 2020-21 is 301. So one thing is sure that this question is a question of capital gain. As I have told you or given you a flow chart, first of all, is section 45 conditions fulfilled? Yes. Section 45 conditions are there must be a capital asset which has been transferred by the assessor during the previous year. Yes, I am transferring this asset during my previous year, which is 2020-21. So this is my section 45, but to complete section 45, I need to check section 2 clause 14 that is it a capital asset? Yes, jewelry is a capital asset. Everything in this world is a capital asset except some items. All personal belonging except jewelry. So jewelry, even if personal, is a capital asset. Then section 2 clause 47, is it a transfer? Yes, because sold. Then section 47, is it a transaction which is not treated as transfer? No. When you read section 47, which I have told you, you will find that this transaction is not covered under exceptional category, or this must be treated as transfer. So I have checked these 4 points: section 45, section 2 clause 14, section 2 clause 47, and section 47. And now my first stage is over. That income will be computed under capital gain. Now the next question: is it a short term or long term? It depends on what type of the capital asset plus its holding period. Type of the capital asset means name of the asset. What is the name of the asset? jewelry. And now I need to check the holding period. Can you tell me what holding period I will check? 12 months, 24 months or 36 months?
36 months.
Any answer? 12 months, 24 months or 36 months?
36 months.
36. Any other answer? $36 months. In case of jewelry, the period of holding must be 36 months. If it is transferred within 36 months, short term. If it is transferred after 36 months, long term. So one jewelry was purchased in 6/7 and another jewelry was purchased in 12/13. So in both the cases, it is much beyond 36 months time limit. So second stage is also over. I know that this asset is long term. Then third stage. So I need to compute now. There is only one section to compute capital gain, whether it is long term or short term, and that is section 48, except some exceptional categories like depreciable asset I have told you. So for your level, you are only concerned with section 48. Now, if it is long term, the process is what section 48 says. Sale minus expense on sale minus indexed cost of acquisition minus indexed cost of improvement. Now, before computing indexed cost of acquisition, you must be having cost of acquisition. And before computing cost of acquisition, you must be having the knowledge of actual cost of acquisition. Do remember, my actual cost of acquisition is different from cost of acquisition, can be different from cost of acquisition. As per section 48, I deduct cost, not actual cost. So to get the cost, I must be having actual cost. Actual cost is very simple. It is the purchase price at which I have purchased the asset. But in some cases, assessee might have become the owner of the asset not by purchasing it, but by way of gift, will, etc. In that case, to arrive at the actual cost, you need to take the help of section 49. So whatever is the case, whether you have the actual cost or you got it through section 49, first of all, you must be having actual cost with you. Now, what is my actual cost here? Here I am not supposed to take the help of section 49 because I directly purchased the asset. So my actual cost is how much? 80,000. For another jewelry, my actual cost is how much? 90,000. So I have the actual cost now. Then I will move to the next stage. What is the cost? So what is the cost of acquisition? So there are 8 categories of determining cost of acquisition. Category 1 related to goodwill, trademark, patent. Category 2 related to shares. Category 3 related to those long-term capital assets covered under section 112 which have been acquired before 1st Feb 2018. Category 4 liquidation, not in our course. Category 4 subdivision, not in our course. Category 6 when capital assets have been acquired before 1st April 2001. In this case, no, not acquired before 1st April 1. Category 7 when capital asset has been acquired because of the modes which are mentioned in section 49 subsection 1, that means by way of gift, will, etc. No, that is also not there because I actually purchased the asset. So I am covered in this case under category number 8 where capital asset has been acquired because of where capital asset has been acquired other than those covered under category 7 above. This was the point. So in this case, my cost of acquisition is equal to actual cost of acquisition. So what is my cost of acquisition for jewelry 1? 80,000. What is my cost of acquisition for jewelry 2? 90,000. Once I got the cost of acquisition, then I will move to the next concept, indexed cost of acquisition. Indexed cost of acquisition, we are having only one formula. Cost of acquisition divided by cost inflation index for the first year in which the asset was held by the assessee or cost inflation index of 2001 to whichever is later. So 1-2 is not later. In this case, 6-7 is later. In this case, 12-13 is later. So how will I compute the cost of acquisition of these jewelry? Jewelry 1, 80,000 cost divided by the index of 6-7, which is how much given? 122. Multiplied by the index in which it is transferred, 301. Similarly, for jewelry 2, 90,000 is the cost of acquisition divided by index of 1213, which is 200, multiplied by transfer 301. I will get index cost of acquisition. So for the time being, I have discussed with you only these 3 lines. Let us start solving these 3 lines. So what I have discussed, I will now simply implement it. I hope you got a little bit idea of what I have just said. You need to revise your concepts. So let me now start solving the numerical. Capital gain is very interesting and very easy if conceptually you have understood it. Or in fact, everything is very easy, not only income tax, everything, provided you understand it conceptually. Is the screen visible?
Yes, sir.
Wait a second, I think I have to reopen that. Yes, I need to reopen this screen. Start solving it. I hope you can see the screen. So let me start writing. So let me start solving this numerical. From my book, I am solving a numerical. Page 7.63. So as I told you that first of all, two separate capital gains will be computed. So let us compute computation of, or write it, computation of income under the head capital gains. Of D for the assessment year 2021-22. So there are technically two questions in this one question. Since there are two assets, two gains. Jewelry 1, jewelry 2. You must write full form, okay? Don't use any abbreviation something. So when it was acquired, year of acquisition, jewelry 1 was purchased in 2006-07 and it is purchased in 2012-13. Now, can you tell me what is the holding period required for long term or short term? In both the cases, the holding period requirement is 36 months. You must present this question in such a way so that examiner knows that you know the concept. Everyone in this question can say that it is long term because maximum is 36 months. But if you write exact number of months, this will leave a good impression on the examiner that you know the exact concept. Otherwise, a jewelry, one jewelry is acquired in 6-7, another in 12-13, sold in 20-21. So everyone knows it is long term. But only that person will know exactly 36 months who know the concept of holding period. So these things you must take care. How you should leave a good impression on the examiner. Now, which type of asset is this? Long term. And here it is also long term. Now let us compute capital gain, sale consideration. How much is sale? 8 lakh, 10 lakh, 10. This is sale value. Less expense on sale. 1% of sale price. So 1% of 1 lakh, 8,000. And 1 lakh 1,000. Say less expense on say less. Since it is long term, I will compute indexed cost of acquisition. Now for index cost of action, you have to write working note number 1. This is what you should representation should be. Okay, working note number 1.
Excuse me, sir.
Yes, yes.
For expense on sale on jewelry too is
What?
for expense on sale on jewelry too is 10,100.
1%. Yes, 10,100. Yes. Yes. So note 1. Jewelry which is purchased in 6-7. I'm writing short form. You must write concept exactly. So what you should write? That where the capital asset is acquired, where the capital asset which is acquired is not covered under these 7 categories, for given for determining cost of acquisition, given for determining cost of acquisition, then the cost of acquisition is equal to actual cost. Otherwise, in other categories, I might not take actual cost. Like in category 6, if I acquire the asset before 1st April 1, my cost of acquisition can be actual cost or FMV on 1st April 1, whichever is higher. So I might not take actual cost in other situations. I might not take. In category 3, when there are long-term capital assets acquired before 1st Feb 2018, I might not take actual cost because that depends upon the provisions. But if any capital asset which is not covered in those 7 categories which are given to determine cost of acquisition under section 55 subsection 2 in different clauses, then cost of acquisition is by default actual cost. How do I determine actual cost? You must know that you should not write, but that is only for your knowledge. I'm always repeating it. Either it is directly or through those circumstances which are mentioned in section 49. Here I am directly purchasing, so I will not use it. So my direct cost is, in case of jewelry 1, the cost of acquisition in case of jewelry 1 is direct 80,000. Therefore, what is my indexed cost of acquisition? So first you note down the formula in the exam that you should remember. I'm not writing the formula. You should use the formula divided by index of which year? 6, 7 or 1, 2, which is later? 6, 7 is later. 1, 2, 2 multiplied by transfer. Similarly, for jewelry too. For jewelry which was purchased in 2012-13. Same thing where the capacity is acquired, which is acquired is not covered under the 7 categories given for determining cost of acquisition. Then cost of acquisition is actual cost. Here also, I'm not supposed to take any help of section 49 because directly I have the actual cost. So that actual cost is 90,000. So my cost of acquisition becomes 90,000. You must remember that to compute indexed cost, I have passed 2 stages. First stage is actual cost, then cost, then indexed cost. Therefore, indexed cost of acquisition is 90,000. Index of 1, 2 or 12, 13, which is later. 12, 13 is later, multiplied by 301. So both gives me index cost 80,000 divided by 122 into 301. 197377, and it is 90 divided by 200 into 301. 135,450. So you simply write it. 135,450 is jewelry 2. And 197377 is jewelry 1. Indexed cost of improvement. I found that I have not done any improvement. So this is my LTCG. The question is not yet complete. Only first 4 lines are complete till this point. So my LTCG is, can you tell me the amount? $594,623. $864,450. Please raise your hand if this question is clear till this point. You are not supposed to only learn the examples or numericals. Concepts must be strong. Anyone can compute the answer, might be coincidentally also, but conceptually you must proceed to solve anything. Because at higher level, when suppose you join any high level jobs, or tomorrow you become at very high position, any constitutional position you occupy, you cannot say anything coincidentally. You have to give reasons. Others will only trust when you give the reason. So make this a habit that when you say something, you say with confidence so that you know the and confidence comes when you know the concepts. The way of determining cost of acquisition under category number 8, which I have given to you in this, is conceptual clarity. Otherwise, anyone can say that in this case directly cost of acquisition is 80. But if I add something here, that person who doesn't know the concept will get confused whether 80 will come or any other value which will come. So make this a habit as far as possible that proceeds systematically and having the correct concepts with you. Now next point of time. Next point. Again, let me show you that question. So I have covered till this point. It says he purchased a plot of land. This is a new point. He purchased a plot of land for rupees 4,15,000 on 4th Jan 21. 4th Jan 21. For construction of residential house. Can you tell me the use of this line? Can you tell me? Can you think logically where I can use this point? What benefit it can give it to me? Or even if there is no benefit to me, what logically is the point under the Income Tax Act for this line? Anyone who can think.
Exemption of capital gain.
Yes, exemption of capital gain, because whenever you have long-term gain or short-term gain, always think, is there any exemption available or possible? So since I have two long-term capital gains, I will think, or as a rational person also, I will try to get the exemption. Now, exemption is one point that yes, I should check for exemption. Can you tell me what exemption I can get for this line? (54F). So let me again share with you my screen. In every capital gain question, if you compute capital gain, never forget about exemption. You must be having that thing going on in your mind that might be there is an exemption available. So what I will do now? So I will now start thinking. The same question goes on in the direction of exemption. This is which is going on in my mind. Now, what question I should ask from myself? That what asset I am selling? Jewelry. So I should ask from myself what? Whether I can claim section 54? No, because in this case, what must be sold? Can you tell me what must be sold to get exemption of section 54?
Residential property.
Yes, but I'm selling jewelry, so 54 is not for me. 54B, what I should sell?
Agriculture land.
That is also not for me. 54D, what is there? Compulsory acquisition, which is not there. 54EC.
Land or building or both.
Yes, immovable property, which is not there. 54EE. Not there. 54F, what I should sell?
Long-term capital asset other than a residential house.
Yes, this I can think of now, except a residential house. So yes, I am selling long-term asset, and which is jewelry. So this I can think now. So on which date I am selling? 15th May 20. So what are the conditions of 54F? I'm an individual. Yes. Yes, I'm an individual. I'm selling a long-term asset. Yes. I should purchase or construct. So if I want to purchase, the time limit is within 1 year before, which starts from 16th May 19, and within 2 years after, till within 2 years, 14th May 22. If I want to construct, within 3 years after, 14th May 23. And yes, I did it. I purchased a land. Of course, if you purchase a house, house is always on the land, not on air. So land for residential is equivalent to land. I purchased a land for rupees 4,15,000. On which date? 4th Jan 21. Yes, it is valid, because my previous year in which I have done this sale is previous year 2021. So I must purchase it within the time limit, and 4th Jan 21 is within the time limit. Here it might come. 4th Jan 21. It is eligible. There is no problem. It's allowed. I told you, if you have not taken a decision to purchase this house, till the due date of filing return of income, you can deposit also. So what I did, though I have purchased land, but construction I have not yet started. So what is the due date of this year? For an individual assessee, due date of filing return is 31st July 2021. And what I did, I deposited on 15th June 21. On 15th June 21, which is before the due date, I deposited 6 lakh. This is also eligible for exemption. If you remember, I told you that amount actually invested plus deposited both will be treated as investment in one house. These two are not treated as two houses. Amount invested plus deposit, this together is treated as investment in one house because this is the condition that I can purchase or construct only one house. So 1015 is eligible under 54F. In the same question, I further deposited 2 lakh on 15th November after 2021, which is after due date. This deposit is of no use. I might have deposited, but I will not get any exemption of this 2 lakh. If I was interested in getting the exemption of this 2 lakh, I should have deposited it till 31st July 21. This is of no use now. So 1015 is used for section, is eligible to be used for exemption under section 54F. But I told you in 54F, theory condition to be checked carefully. You must check theory condition. And which theory condition I checked? I discussed with you which theory condition? That on the date of sale of this original long-term asset, I must not be the owner of more than one house other than the house on which I got the exemption. And that is why in this question, my second last line was saying that he owns only one residential house on 15th May 2020. So that was the hint basically that in this question there can be a use of section 54F. So when I checked this theory condition, I got all the theoretical conditions of section 54F fulfilled. And now one thing is sure that I am eligible to claim exemption under section 54F. So I will do now less exemption under section 54F. So this LTC, now I will write a word before exemption. Had there been no exemption, I could have written it as LTCG only, but since some exemption is given, so above the figure of exemption, whatever LTCG, always it is better to write this word in bracket, these two words in bracket before exemption. Please raise your hand if now you get to know that yes, exemption in the section 54F will be available. Okay, now if you get to know this point that 54F will be available, can you tell me how or what will be the amount of exemption? What will be the amount of exemption now? So you must explain the theory conditions and then you will write calculation of exemption under section 54F. So first of all, you have to explain theory that why 54F will be available. So the point which I told you in this previous screen. Okay, you have to write this in the language, simple language. First you write this theory and then now you will tell the calculation. Can you tell me now how you will compute 54F? Or what is the formula to compute the exemption of 54F? Can you tell me the formula? I want to simply know the formula. Do you remember that formula? Exemption under section 54F. How?
Sir, LTCG into amount invested upon May sale consideration.
No, this is not the correct way to tell the formula. You should tell LTCG is fine, or I can simply write capital gain, or you can write LTCG is fine, but don't multiply it by the what? What you multiply it by what?
Sir, amount invested.
No, you should first write the denominator. What was the denominator? What you said?
Sir, sale consideration.
No, net sale.
Net sale consideration.
Yes. You might get the correct answer, but this is the way to tell. This percentage will be multiplied by the amount invested. Don't say capital gain into amount invested minus or divided by net sale. No, I will tell you why you should not tell this. You will realize it after some time that yes, this is the way to tell. Capital gain divided by net sale into amount invested. Not investment, amount invested.
Sir, ये cost of new asset. अच्छा, okay, sir.
Yeah, that is same thing. Which is it is basically the amount which is eligible for section 54F. Now, after this, can you tell me what I will do? In case of jewelry one, if you compute this capital gain, which is 594,623, 594,623 divided by what? Net sale. And now you can see that why I have left one line blank here, because I knew that there will be section 54F. Whenever you have section 54F, it is always better that after sale minus expense, you leave one line blank before you write indexed cost or indexed cost of improvement or acquisition, because you will need that information also. Though it is not compulsory to write it. I can write it in working note also, but always it is better to write this, because only in section 54F I need net sale, otherwise I don't need net sale. So whenever you have 54F, if you think there will be 54F, you can write it. It is not compulsory, of course. You write it or doesn't write, you don't get any extra advantage or disadvantage. But you write it. So what will be the percentage? 594,623 divided by 792. Multiplied by what? Can you tell me what I will multiply here? Can you tell me what I will multiply here? Any answer? Can you tell me what I will multiply here? So now you don't write anything, because I might be doing something wrong. So don't write anything. So let us multiply 10 lakh 15, because 10 lakh 15 is the 10 lakh 15 is what? Amount invested. It is eligible. You multiply by 10 15, and what answer you get? Can you tell me what answer you get? Hurry up. $7,620,48. Don't write anything. Now you understand. I will do something wrong. Please raise your hand if you got this answer, that exemption under section 54F from jewelry 1 capital gain by my formula comes out to be 7,620,48. Have you got this answer? Or have you understood this concept? If yes, please raise your hand. That yes, calculation is correct. Though conceptually I will do some changes, but this is correct answer. There is no problem. If I compute this answer, there is no problem at all. This answer is also correct, but I will do a calculation which gives me some better answer. That's it. Otherwise, this calculation is perfectly valid. Please raise your hand if you understood the application of section 54F formula. LTCG divided by net sale multiplied by investment. Now this is only for jewelry 1. So I'm Mr. X. Suppose Mr. Y thinks in a different direction. Everyone's mind in this world is different. So I might be thinking differently. So don't write anything. I'll do something different. So this is what, suppose one person is thinking in this direction. Everyone is having his or her own mind. Another person, this is the thinking of one person. Another person says that exemption under section 54F, he thinks that why jewelry 1 gain I can utilize for jewelry 2 gain also. That is also perfectly fine. What is the LTCG of jewelry 2? And do remember, these are 2 questions going on, so you cannot merge these two. 2 questions are going on. Jewelry 2, 864,450. Another person can say that my capital gain in jewelry 2 is high, so I will use my jewelry 2 first. 864,440 divided by net sale 999,900 net sale multiplied by. Now either of this option is admissible. It's not that 1015 can be used for jewelry 1 capital gain, also for jewelry 2. No, in reality, if you use it for both these two capital assets, it means you want to say to the tax department that you have invested 20,30,000, double of this. No, in reality, you have invested only 1015. So if one person is using it for jewelry 1, he cannot use it for jewelry 2. And if one person is using it for jewelry 2, then he cannot use it for jewelry 1. Now what value will come? Don't write anything. $877,505. This person gets this much exemption. But how much is the maximum capital gain of jewelry 2? Maximum capital gain of jewelry 2 is 864,450. So if you take the thought of second person in mind, then exemption comes out to be 8,77,000 something. But if gain is only 8,64,000, your maximum exemption will be 864,450. Exemption can never exceed income. And if you are going with the thought of first person, your exemption comes out to be 7,62,000. But if your gain is only 5,94,000, then only this much will be the gain. This is first person. This is the thought of first person. So first person will not pay any tax on this capital gain, and his income will be entirely that which is of jewelry 2. Second person will not pay the tax on jewelry 2 gain, and his income will be entirely the income of jewelry 1. Who is better as far as thinking is concerned? Who is more rational, more logical, more intelligent when it comes to save the taxes? Legally perfectly valid. Who is saving the more tax? Option, this first person is saving the more tax, or second person will save the more tax?
So second.
Second, why? Why?
Because he is paying less tax.
The reason is second person has utilized the investment for that capital asset which is giving him more exemption. Is this point clear to everyone? That second person is more rational? Please raise your hand. Second person, the way by which second person has applied this provision, he is more intelligent. First person is also legally valid as per the provisions of the act. There is no problem. Both these approaches are correct, but more rational, more beneficial is second one. Please raise your hand if you are agreeing with the thought of second person. That yes, first of all, in this question, I should first utilize my amount towards exempting my jewelry 2 gain rather than jewelry 1 gain. Okay, these are 2%, but let me see, is there any third person amongst you who can think differently? Don't see the book. If you have seen the book, don't tell anything. I want to see the third person in this class. Is there any person who can think more differently? Who can save still more taxes than the person 2? Can you think of any other approach? Can you act more wisely than person 2? So I want to see third person who can give me some idea how tax can be saved more. Person 2 is better than person 1, there is no problem, but person 3 might be better than person 2 also. Any answer?
Sir, can we divide amount invested?
Yeah, I can divide. There is no issue. I can divide the amount. It is not under any compulsion that I should utilize the entire amount of 10,15 only for one asset. I can divide this amount separately. There is no problem. It's allowed. can you tell me this before I start discussing this point with you? Can you throw some light how I should do? You should think logically. Entire point lies in this formula. You should just reopen this formula, or you should just imagine in your mind what is going on in this formula. How I can maximize my exemption? How? Just think logically. Amount invested remains same. How you will get more exemption? Can you tell me how more exemption? That asset which is having this percentage maximum, this is giving me some percentage, capital gain divided by net sale. This percentage, the asset which is having more percentage, this percentage more, that is having more exemption. It's simple logical point. If my amount invested is 100 rupees and if I multiply it by 100%, then my exemption will be 100 rupees. My amount invested is 100 rupees. If I multiply it by 90%, my investment is only 90 rupees. Amount invested remains 100. If I multiply it by 70%, my amount exempted will be 70 rupees. So I can say rationally, I should see this percentage. This percentage capital gain divided by net sale into 100. Into 100. Compute this percentage. And the asset which is having maximum percentage computed by this application is the best option available. First of all, I should utilize my amount towards that. So when in jewelry 1 you see how much is this percentage in jewelry 1. If you see the percentage of jewelry 1, if you see the percent of jewelry 1, what is this percentage? Capital gain divided by net sale consideration into 100. What percentage you will get? 594,623 divided by 792. You will get 75.08%. 75.08%. In jewelry 2, what percentage you are getting? With the same formula, your investment remains same. Whether you are selling capital asset 1, capital asset 2, capital asset 3, capital asset 4, doesn't matter. What you invested remains same. But different capital assets might give you different percentages. This percentage might be different. Investment remains same. So, as per this formula in jewelry 2, your percentage is 864,450 divided by 999900. 86.45. So as a rational human being, I will first utilize this amount, the amount which I will multiply now with this percentage, whatever amount I will multiply now, I should first utilize towards jewelry 2 capital gain. Is it clear? If yes, please raise your hands. It's logical. More percentage you multiply with any amount gives you more value. This is what I need. Please raise your hand if you have understood the way to do tax planning. Now this is what is going on in the mind of a third person who is wiser than person number 2. Person 2 was wiser than person number 1, but person 3 is wiser than person number 2. And now, what also you need to think? You must also think that total investment is 10,15,000, and even in jewelry 2, though I have maximum percentage 86.45, but how much is maximum capital gain which can be exempt? How much is maximum capital gain? Can you tell me how much is maximum capital gain which can be exempt?
8 lakhs.
Sir, actual capital.
864,450. So I should use only that much investment which will exempt my 864,450. And how much will be that investment? if you see this formula, if it denominator 9999900 is given, so rather than 1015, if I use only 9999900, what I will get? If you cut it, I will be left with this much. So this third person will say that I will utilize, he will utilize rupees 9999900 for jewelry to sale, and remaining balance. How much is remaining balance? Total investment was 10,15,000 out of this. So now you don't have any option. Then whatever balance you can use for jewelry one, because you have no option now. You don't have 5 or 6 assets. You have only 2 assets. Maximum is this benefit. So this amount, rupees 9999900. So this difference comes out to be
15,100.
Yes, 15,100.
100.
I have no option, but I will use for remaining balance of this will be utilized for what? Jewelry one.
Jewelry one.
Yes. So on this basis, now I can say that my exemption will be, I'm showing it on the next page. So now my exemption under section 54F for jewelry to gain is equal to LTCG 864,450. This is fair now. Basically all that thing is going on, was going on just to make you understand the concept. Had I directly told you this point, you never have got what has gone behind this working. So never go directly for never go to learn something which is direct. That learning is better which is indirect. That tells you the reason that why you are adopting this path. Multiplied by 9. This is the fair now. So entire working which was done earlier was only to compute this point. That's it. Only to compute this point. So my exemption will be for house 2 864,450. And what is my exemption? Under section 54F for jewelry 1 is equal to a 594,623 divided by 792 multiplied by so entire working was only just to compute these two calculations. This is fair now. Theory, of course, you have to write that out of this much amount I will utilize remaining 9,99,900 for jewelry 2 and remaining for jewelry 1. And then you have to show to the examiner also that on what basis you have taken this decision. You will show the calculation of this percentage. You will say that if this percentage is more in this jewelry 2, then this option is better as compared to jewelry 1. Now this will tell you the exemption of how much amount? 594,623 divided by 7,92,000 multiplied by 15,100. How much is this? Please compute.
Sir, 11,337.
11,337. That's it. So 864,450 is the exemption of section 54F. Okay, so you do this calculation and correction. House 2 is clear, but in house, in jewelry 1 I will write 11,337. That's it. The difference is now 594,623 minus 11,337. $583,286. That's it. With this, the topic capital gain is over. Please raise your hand if this question is clear. Okay, so now you have to wind up your entire chapter. If you have my book, you wind up all the problem, numerical, everything. And if you have any other material, please wind up this topic, capital gain, from that book. So whatever material you have, you are advised to wind up that. This topic, capital gain. Nothing is left except section 50, which I will discuss with you when I will discuss the topic of PGP. So that's all from my side. Capital gain is over from my side. In case you have any query, I'm giving you 30 seconds. You please ask right now. Anything which you want to ask, you can ask. Okay, so no query. So you should wind up this capital gain within 3 days, excluding today. So if today is Monday, then you should wind it up by Thursday night. In any case, you should wind up this topic capital gain by Thursday night from whatever material, whatever book, whatever sources you have with you. You must wind up this topic capital gain. Tomorrow I will start with a new topic, profits and gains of business or profession. And that's all from my side. Goodbye.